Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Thursday, November 11th. Stock futures are pointing to a lower open on Wall Street. Two major factors weighing on sentiment: a disappointing outlook from Cisco Systems and the latest inflation report from China. Right now, shares of Cisco are tumbling 15%. The company's quarterly numbers were actually pretty good, and Cisco bought back more stock than expected, but it's the network equipment maker's forecast for the next few quarters that has investors worried. Cisco's guidance for the current quarter and the rest of the next year are much lower than expected. Following the news, Deutsche Bank, William Blair, and Wunderlich all downgraded Cisco, and Goldman Sachs and Kaufman Brothers lowered their price targets on the stock. In addition, Citigroup downgraded Jabil Circuit because it will be affected by lower growth at Cisco.
Chinese inflation spiked in October, mainly due to a huge jump in food costs. Consumer prices jumped 4.4%, their fastest pace in 2 years, and prices at the wholesale level also topped estimates. The report is raising fears that the central bank may tighten its monetary policy even further. Many experts now expect 3 interest rate hikes by the end of next year to combat inflation, which could slow global demand. That, along with Cisco's outlook, seems to be dampening risk appetite among investors.
Also weighing on sentiment are continued concerns about sovereign debt in the Eurozone. The European Commission said it's ready to act if Ireland needs a bailout, and the economies of Greece, Spain, and Portugal are struggling as well. Those fears are pushing stocks across Europe mostly lower and driving the euro lower against the US dollar for the 6th straight session.
Currency disputes are one of the major issues being addressed at this week's G20 meeting in South Korea. The U.S. has been pushing China to let its currency rise, but China, along with other countries, have complained about the Federal Reserve's plan to pump another $600 billion into the financial system, effectively devaluing the dollar. President Obama told other leaders that a strong U.S. economy is crucial for a wider global recovery.
A few stock movers to tell you about. Ingersoll Rand is jumping nearly 5% in the pre-market. It's replacing Pactiv in the S&P 500 index. Viacom is also gaining ground, now up more than 3% after a solid earnings report. The media giant also said it's selling its Harmonix gaming unit, which developed the Rock Band video game. Citigroup raised its earnings estimates and price target following the report. And we're keeping an eye on shares of Kohl's. After Wednesday's close, the retailer reported earnings in line with expectations and said it will resume its stock buyback program. The news prompted Citigroup to boost its stock price target and earnings estimates for Kohl's. Citi also raised its estimates for Polo Ralph Lauren after that company's strong results. But Citigroup and Goldman Sachs have conflicting views on Macy's. Following today's closing bell, we'll get quarterly numbers from Walt Disney and semiconductor company NVIDIA. Both stocks are lower in anticipation of those results. NVIDIA's rival Intel is getting a vote of confidence from Morgan Stanley, which upgraded the stock from equal weight to overweight. Also keep an eye on shares of Halliburton. Its earnings estimates and stock price target were raised by Goldman Sachs, and Citigroup upgraded BlackRock from hold to buy, saying the buyout company is improving its competitive position. But JetBlue shares may decline today after Citigroup downgraded that stock. Right now, oil prices are rising to back around $88 a barrel on signs of improving demand for fuel, and gold is rising back above $1,400 an ounce. That's the latest from Weiss Research. Have a great trading day.